In this video, we technically analyze SA40 futures, which is the South African index. To those of you who are new to this index, what it is an index that is made out of the top 40 companies that are listed on the JSE Stock Exchange, which is also known as the Johannesburg Stock Exchange, right? So without wasting any further time, let's get straight into the analysis. And on the monthly chart, we have this candlestick over there. What it is a bearish candlestick which has quite a small body and a relatively long lower wick. And what it tells us is that there's a lot of money stuck at that point, and that in the future we will see the market actually head down to grab all of that liquidity. And that is because liquidity is actually money that needs to be triggered by the market at one point or another, as I usually say, right? As much as we have that area, we also have this overextended W formation over here. It's an overextended W formation because the first leg is actually slightly lower than that second leg, and it has a neckline at that point, and we can see that the neckline has been violated to the upside, and we saw the market come back to the neckline to test it. And where the neckline is where we should have looked for those potential buying opportunities, right? And that is because, guys, as you guys know, whenever we have these formations, we want to see the neckline being violated to the upside, the market heading back to the neckline to test it, and at that point is generally where we look for those potential buying opportunities, especially if the neckline aligns with any key numbers that we have on the Fibonacci retracement tool. So what I'm going to do right now is just add a neckline for that W structure. Let's have a look. So we could say more or less that our neckline is at that level. And then what I'm going to do, guys, is to just utilize the Fibonacci retracement tool just to see if that neckline actually aligns with any key numbers that we have on the Fibonacci tool. And here we go. And let's have a look. Just bear with me, guys. So we could see that in regards to the neckline of this W structure, it actually falls, we could say, in between the 23.6 as well as the 38.2% Fibonacci retracement levels. In my humble opinion, there's a good level, or those are good levels rather, to be looking for those potential buying opportunities, as I've just said, right? Anyway, let's proceed. What else do we see on this chart that we should be paying attention to? Another thing that I see that is also very much interesting is that we have this candlestick over here. It is very much similar to this one in that it too is carrying a lot of liquidity at that level where it ends, and that in the future we will see the market actually head down to grab some of that liquidity, right? We have another one at this point as well, right? And it too is very much similar to this one in that it too is carrying that liquidity, and in the future we will see the market head down to those levels to grab all of those liquidity points. So what else do we see, guys, in regards to the monthly chart? At this point I don't see much, but I just also want to point out that as much as we have this W structure over here, just remember that a lot of traders and investors usually buy on the second leg of that W structure, and they place their stop losses just at around that level. So what this tells us is that there's a lot of money stuck here in the form of stop losses, and there's plenty of scope actually for the market in the future to come down, to grab the liquidity at this point, to grab the stop losses that are located at this region, to grab the liquidity that's associated with that candlestick, as well as this one as well, right? So in the future we will indeed see the market actually head down to grab all of those liquidity points. Anyway, from here what I'm going to do is head down to the weekly chart, and let's have a look. Here we are on the weekly chart, and just to remember on the monthly chart we spoke about how we have this overextended W structure which has a neckline at that point, and we said that the market had violated that neckline to the upside, came back to the neckline to test it, and that at that level where the neckline is where we should have looked for those potential buying opportunities, right? Now that we're on the weekly chart, what is it that we see that we should be paying attention to? Let's have a look. At this point I don't see much, but I just want to point out that as much as we have that W structure that I spoke about which has a neckline at that point, just also bear in mind that we have what seems to be a double top forming or an M structure, and we just need to be careful as far as buying goes, right? As much as I said, guys, at this point we should have looked for those potential buying opportunities, just also bear in mind that it is quite possible that we may get if I can just go back to the weekly chart, we may get an M structure, right, where the market moves further down to around this level in line with where it started. So we just need to be careful in regards to buying. Anyway, from here what I'm going to do is head down to the daily chart, and here we are on the daily chart. On the daily chart, I'm just going to start off by adding my daily channel. Let's have a look. Just bear with me, everybody. And here we go, here we go, here we go, more or less. And just remember that we just need to ensure that whatever drawings that we add to our charts are as close to perfection as possible, just to ensure that ultimately when we do execute, our execution is also very much in line, right? So remember, on the bigger time frames, we spoke about how we have this huge W structure over here, which has a neckline at that point. And I also spoke about how we could potentially have this M structure over here, and that we should be careful in regards to buying, right? But here we are on the daily chart. Let's zoom in and see what else is happening on this chart. Let's have a look, let's have a look, let's have a look. Remember guys, I spoke about how we have this potential M structure. As much as that's the case, I hope you guys can also see that we have another W structure over here, which has a neckline at that point, right? So what this tells us is that as much as we have this M structure over here, the bias, or rather my bias at this point, is for the market to continue to move further up, at least to complete this smaller W structure over here. I hope you guys can see that, right? To add to this, as much as we have this structure over here, in my humble opinion, chances are we're going to see the market actually continue to move further up. Another reason why I say so is because not only do we have this W structure over here, which motivates and tells us that the market will likely move further up to around this level, we also have at this level a gap. And what gaps are areas where there's a lot of money trapped, and they are, as I say, areas of liquidity, and the money will always go to, or rather the market will always go to where the money is, right? And another reason is that we have this candlestick over here, and what it is a bullish candlestick with quite a small body and a long upper wick, and it tells us that there's a lot of money stuck at that level where that wick ends, right? So there's plenty of scope for the market to continue to move further up, right? So it may be possible that this potential M structure is a bit of a trap, because just like with W structures, whenever it comes to these M structures, what normally happens is that a lot of traders and investors sell on the second leg of that M structure, and they place their stop losses just above, right? So I can tell you right now that at this point in time, there are a lot of stop losses that are located in this region, and chances are we're going to see the market move further up to grab all of those stop losses, as well as to fill this gap over here. Just bear with me. This gap over here, which is carrying all of that liquidity, in addition to reaching that level, which is also carrying a lot of liquidity because of this candlestick, which is a liquidity candlestick, right? So anyway, what I'm going to do now is just add a neckline for that W structure. Let's have a look. So we could say more or less that this is our W structure, and we can also see, if I can just zoom in, that the neckline has been violated to the upside, and what we anticipate to happen is for price to continue to move further up. Just also keep in mind that as much as we have this W structure, we also have a lot of stop losses that are located in this region, as a lot of traders and investors usually buy on the second leg of that W structure and place their stop losses just below, right? Just keep that in the back of your mind, right? Nonetheless, at this point in time, based on the daily chart, my bias is still for the market to continue to move further up, and especially to that level where we have that candlestick. In fact, I'm just going to mark that candlestick as well, because it's very much important. Let's have a look. There we go, there we go, there we go, there we go, there we go. Right, so what else do we see in regards to the daily chart? Another thing that I see on the daily chart that is also very much important is that we have another gap here, it seems, and another one at this one, that level rather. And as I usually say to you guys, gaps are liquidity, and at some point the market will head down to those levels to grab that liquidity, right? Anyway, from here, what I'm going to do is head down to the H4 chart, and here we are on the H4 chart. On the H4 chart, I'm just going to adjust my channel somewhat. There we go, 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 there we go. Right, and let's just zoom in. And then from here, what I'm going to do, guys, is just add my H4 chart as well, or rather my H4 channel as well. How would I add my H4 channel in this regard? I would add it in this manner, more or less, right? And in as far as the H4 chart goes, we can see that it matches with the daily chart, in that both charts are in an upward trending market, or in an upward trajectory, as you guys can see, right? And just remember, just to recap, guys, we spoke about how we have this W structure over here, which has a neckline at that level, and we said the neckline has been violated, and at this point we still expect the market to move further up, and at least to these levels over here that I spoke about earlier, right? But the most important level I believe that the market needs to head to is this level over here, right? Which is where we have that gap as well as that candlestick that's carrying all of that liquidity, right? Anyway, let's zoom in and see what else is happening here. So what else do we see on the H4 chart? On the H4 chart, I can see that as much as we have this W structure, we also have another gap there. And remember, also spoke about how we have a lot of stop losses that are located in that region due to the fact that a lot of traders and investors bought on the second leg of the W structure. Let's zoom in and see what's happening, right? So guys, we have this W structure. Price broke to the upside of that neckline, came back to the neckline, and at that neckline rather is where we should have looked for potential buying opportunities. And I believe that our first take profit should be this level over here, right, which is in line with the structure over here, where we might potentially get a double top. And our second take profit should be this level over here, which is in line with that area, which is where we have that gap as well as that candlestick that's carrying all of that liquidity.